In this video, traders, we're going to look at taking profits like a pro. Stay tuned. Hey guys, very warm welcome to you. Thank you for joining me. All right, so taking profits is something that is equally as important as managing your risk, because if you're constantly taking small profits, you are never going to get to a point where your risk reward ratio is at a sensible level to kind of compensate for those losses that come around. If you're trying to stretch your profit target way too far, you're constantly going to get things that go your way, come back and stop you out. So there's a sweet spot, just like there is with stops. We're trying to get the stop outside of the noise, but not too far. Same thing with taking profits. And something I've noticed from kind of very, very successful traders is there's a similarity running through them. And when you start to implement this yourself, you start to notice improvement. This is kind of how I improved myself over my almost 20 years now career, is that, I try to look at what some of the bigger traders, some of the traders who've been doing it much longer are doing, implement some of that and then see how that improves my trading and go, right, well actually that works for me. Let me kind of double down on it, let me improve on it. This is one of the things that's worked very well for me, and hopefully it will you too. So it's, understanding the conditions you're in, understanding where the market could go, and allowing yourself the opportunity really for those extended runs when the time's right. So put it down to 5 things. First thing is scale out of trades. Scaling is such a powerful tool for you because number one is it kind of feeds the chimp. When you're in a trade and it's running along, you're like, should I take the profit, should I not? And you're in this conflict back and forth. If you scale out of the position, if you take off half, you are saying, okay, well, I've taken off half, so I put some money in the bank, and I've still got half left to allow the trade to run. So it doesn't have to be a binary all or nothing event, which often we kind of conflict with ourselves when it gets to that point. It's nearly at a level, it's going to reverse this. Taking half off or some off and scaling out just is more powerful. And also from a logistical perspective, guys, how often are you taking the trade off and that's the perfect high? Very rarely is. We're trying to judge the zone, or we're trying to judge, if we're short-term trading, we'll kind of come out into a pulse and we're trying to stagger the order out. If we're long-term swing trading, same kind of thing, which is on a higher time frame, multiple days, pushing to a high before it rotates back over. So scaling kind of aligns you with the noise of the market, if you like, and it's a good psychological benefit from scaling as well. And I've done videos exclusively talked about scaling, so check those out, and there'll be more coming as well. So make sure you're subscribed if you like this kind of approach. So number 2 is always give yourself the chance for a runner. And I've put a little star here, which I'll talk about why in a second. Always a runner. A runner is when you're in a trade and it just goes. You're in the long and it just rips and rips and rips and rips. Now, if you're constantly taking all your profits out at a target, you're never giving yourself the opportunity to have an outlier trade. You'll never really get a trade that does a 10 to 1, 20 to 1 or more, because you're always taking the profits. Now, I put a little star here because that's not always the case. In certain conditions, if your trade is a very specific mean reversion type trade, example could be press to highs on an exhaustion move, you're taking a little short trade back to a mean, you probably don't really want a runner then, because the chances of doing a full reversal are quite low. So even though I said always, this is for the majority of the setups where you're trading with the trend, where you're trading an extension type move, having the opportunity to have a trailer on the last batch of the scale gives you that chance to get on that runner. So if you're scaling out at key levels, like bang, 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 out comes the trade, scale, 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 batch comes off, you always have a batch left that is never taken off at a target. It's always taken off on a pullback to a trailing level, whether that's a moving average, whether that's below the prior low, or however you do it. If you have that, it gives you the chance that if you're on the right end of something that every now and then will just go stratospheric on you and just put massive amount of risk reward ratio into your account, then you have to have that opportunity, and having that opportunity is essential. Third thing, guys, is be in tune with market conditions. This is super key, and kind of put it as point 3 here, but actually it's a kind of massive topic in itself. But really, this is, one of the things you notice when you're doing well with your trading, and you notice with, some of the guys who are super levels at 8 figures, 9 figure guys, they are well in tune with the market conditions. They know where to have the stops, they know where to have the targets, and that then allows them to be more confident with the trade and run the trade. You know, if the conditions are very, very stagnant, they're choppy in this, and you're trying to have extended targets, you're never going to get them. So you either choose to take the trade or take what the market is going to give you. So being in tune with the conditions is super, super important. The fourth thing, guys, I've got for you is to reassess target at key points. Now, the mistake that we make is we're constantly reassessing the trade as the trade is going. So you're looking at it every hour or every 5 minutes if you're day trading, or 1 minute or every tick even, and that doesn't do us any good. We want to reassess the trade, but at key points. So that could be, hey, when price hits this level, I want to reassess how my limit's doing. So example could be if it rips up straight to your level that you're thinking of taking some out at, you might want to extend it. You go, hey, this is far stronger than I thought. I'm on the long side of this trade. Why don't I look to hold this a little bit further? Why don't I extend that target a bit? If it kind of closes at highs, only if you're a swing trader, maybe you want to keep it for the next day. So you're reassessing the trade and you're extending or decreasing your limit depending on how the conditions are. If it's kind of really struggled and kind of nearly stopped you out and just about pinged up and closed kind of midpoint, you might go, oh, I'm asking a bit much for us, for a really high move. Maybe I'll just have it at the prior high. But the point is, however you adjust it, you don't do it regularly, you just do it at certain times, whether that's a time of day, like the end of day if you're a swing trader, or beginning of the day if you're a swing trader. If you're a day trader, maybe it's on the hour, if it's 15 minutes, or at a key level, so it's price-based or time-based. That's when you're reassessing what you're doing rather than all the time. And then if you're reassessing, you're in a much more powerful position. And number 5, learn from each trade. So one of the things that you should be implementing, I definitely recommend it, is that after each trade you do, you just look and see, what did the price do after I came out of the trade? Was that limit, was that the right place to come out? Because when you look back and you go, I've got 10 trades here, a group of 10 trades, and all of them went on an extra or doubled your target, then you've got some evidence there to suggest that you're coming out way too early. Now, even on paper, you might be like, hey, I've got 100% winning trades. I've made this out of them. I've made 50 pips, whatever you're trading. Great, 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 great. 500 pips in the bank. But actually, if every single one of those went 100 pips, we're talking from a Forex perspective, then you're learning something, and the next 10 trades you do, you can extend that target. Now, whether that's 100 pips or that's 75, you might adjust it and say the conditions are slightly changed. But the point is, you've got data to say that you haven't quite extracted as much as you could from the trade. So learning from each trade. Anyway, guys, these are kind of some of the things that I've seen some super successful traders do, and I've implemented these myself and noticed huge improvements over the years, and continue to work on things like scaling and extending those targets and looking for those pressed moves and trying to add other influences like market conditions, the underlying market, what the market's specifically waiting for, what's the news, what's the engine, what's the price action, and adding those. But it's very personal to my strategy and style. You will have your own, but the point is, if you work on this, you dedicate a chunk of time to working on taking your profits and your targets, you can start to extract a bit more. I know we focus a lot on stop losses and risk management, but having a good strategy for this and being able to eke out a little bit more from the deal you're in, being able to eke out a little bit more profit from the risk you're taking, can help boost the P&L. Because even if some of the things are getting stopped out and you're kind of losing money on this, when you get the odd trade that's really running on, it can undo the bad work, perhaps potentially even some of those trades that didn't work out so well. So something to focus on, something to work on. Taking profits like a pro. If you like this kind of stuff, thumbs up. Much appreciated, guys. Appreciate your support. Take care. Bye-bye.